Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be going over some XRP technical analysis, delivering some trade ideas surrounding the fundamental data that we are set to see tomorrow on the US data front. If you all enjoy these video breakdowns, educational and delivering realistic analysis, do us a favor, smash that thumbs up button and subscribe to the platform. So in focus tomorrow, we have the Federal Reserve's primary inflation measure, which is the core PCE price index month over month and year over year. Now, why is this so extremely important? Let's just first take a look at the total cryptocurrency market capitalization and where we are currently sitting at in price. So we're on the 8-hour time frame, and this is the total cryptocurrency market cap chart. And we can see that we have come back down into this demand range where price was at all the way back at the end of February, where we had some lower core PCE price index year over year coming out below previous readings from January's readings from 2.9% to 2.8%. And we can see the positive implication that that had on the digital asset space, where again, risk asset classes as a whole hugged onto the narrative that because of lower inflation readings, at some point in time in 2024, the Federal Reserve was going to start to cut interest rates. Well, that whole entire interest rate cut narrative started to diminish in March when we started to see an uptick in inflationary readings. You can see that the total cryptocurrency market cap started to top out roughly in the middle of March as we had some higher inflation readings. And then towards the end of March, rolling over into April, we also had an uptick in inflationary readings, causing further downside pressure on risk assets, pushing back that rate cut narrative. Now, coupled with higher inflation readings and upbeat US economic data, along in this area where we had the geopolitical escalations over the past 2 weeks in the Middle East, also creating a risk-off market sentiment, those have been the catalysts that have dropped the cryptocurrency market capitalization down to about $2.1 to $2.3 trillion in this current range in which we operate in. So let's just talk about the scenario for tomorrow. Now, again, on the forefront, we have the core PCE price index month over month and year over year. Before we get into the XRP technical analysis, let's just go over the total cryptocurrency market cap, the DXY, i.e. the United States dollar, go over some potential price projections. But first, I want to educate you all on what these either higher inflationary readings would mean for the US dollar or lower inflationary readings would mean for the US dollar, and what we as risk asset investors would preferably like to see. So I'll take your attention back to my post on X, again, putting my analysis on the line for you guys, showing you all that here at CYPRX, we're logical. We don't use any magic indicators or Fibonacci guru sequences or any of that bull crap. We deliver real fundamentals, real TA, and we use institutional delta zones. So I said to you all, I am still looking for buys as long as XRP price holds above 44 to 43 cent range. Currently, the price is retracing from its recent high around 57 cents, which we called out in the private community. And I'm watching for continuations of risk on sentiment. This would need to be driven by lower core PCE price index, which would most likely lead to weakness in the dollar. In such conditions, I will be looking for buying opportunities to enter positions on XRP to target 61 to 62 cents. So let's go over the most ideal scenario first. And that would be if we see lower inflationary readings, i.e., the previous readings for core PCE price index month over month were 0.3%, and the core PCE price index year over year, previous readings were 2.8%. So ideally, we would like to see those readings come out lower at 0.2% and 2.7%. So lower inflation readings in core PCE price index on Friday, both month over month and year over year, would indicate subdued inflationary pressures. This would further prompt risk asset buying, as it would most likely lead to supporting narratives surrounding Federal Reserve rate cut bets, i.e. leading to dollar weakness, as reduced inflationary pressures may prompt expectations of prolonged accommodative monetary policy stances or lower interest rates in the near future, i.e. rate cuts, right? Which we know, going back and looking at the total cryptocurrency market cap from all the way back here in January, when we started seeing lower inflationary readings at the beginning of this year, just looking back at the beginning of this year, we have seen that has been one of the main drivers of this demand in risk assets as a whole. So that would be the most ideal scenario. Now, Looking at the total cryptocurrency market cap, ideally, what I would like to see is I would like to see this low hold, us see a potential double bottom formation for some potential reversals, and see some price appreciation, and for us to come and break above these previous intraday lower highs, correcting some of this previous downside move from when we had the geopolitical escalations. This would be scenario number one. Scenario number two, if we don't see a retracement down into discounted prices, would be buy continuations, a break and retest of this local high, and for us to correct more of this previous bearish move. This would be a scenario on the total cryptocurrency market cap that I'd be looking for if we can get lower inflation readings and further boost and support the rate cut narrative leading to dollar weakness. Looking on the dollar, ideally, what I would like to see is a correction if we see lower inflation readings come out of this previous bullish move, potentially breaking back into this previous demand range here, failing to break these previous highs, and creating some type of bearish order flow pattern as price weakens due to lower inflationary readings, further boosting rate cut narratives from the Federal Reserve. This would be the most ideal scenario that I would like to see. No break of this previous high or these previous bearish candlesticks in the form of bullish order flow, and a break back down beneath this previous lower high, correcting some more of this previous bullish move. On XRP, if we can get the most ideal scenario, which would be lower inflationary readings, weakness in the dollar, boosting rate cut bets, the three scenarios that I would like to see, again, just to refer back to this post, would be a deep retracement for better buys into discounted positions, roughly around 49 to 47 cents on XRP. Scenario number two, I'd be looking for retracement buys into roughly around 50 cents for better discounted buys, looking to respect this previous bullish move. In scenario number three, if we can see lower inflation readings, dollar weakness, rate cut bets remaining on the table, would be if we can see a break above 54 cents, a fractal retest on the lower time frames, to then again see bullish momentum in risk assets to continue this most recent bullish uptick that we've seen. My targets on XRP for immediate intraday profit taking would be anywhere between 58 to 61 to 62 cents for us to again correct more of this previous downside move from when we had the geopolitical escalations over the past 2 weeks, coupled with upbeat US data, higher inflation readings, strength in the dollar, and so on and so forth. Right? Now, scenario number two. This would be a scenario where we see higher inflationary readings, understanding what that would most likely do to risk assets, prompt a risk off market sentiment, and lead to a stronger dollar. Now, again, these are documents, educational PDFs that we deliver in the private CYPRX community. Here you can see this is our educational PDF section where we go over all of these fundamentals in detail, breaking them down for the students, delivering them pre-plan analysis, and a fundamental understanding of how these fundamentals can impact risk assets and trading pairs across the board. Again, if you guys want access to this, you can visit CYPRXtrading.com and you can join our monthly membership. There is so much value in our Discord, and you will be paying less than a cup of coffee costs per day to join this monthly subscription, and you can cancel it anytime if you don't find any value. Along with the fundamentals, you have access to institutional delta zones on multiple cryptocurrencies and digital asset trading pairs. You also have access to my private analysis, along with our CYPRX in-depth crypto research and our logged video research. So definitely consider joining our monthly Discord if you all want to find value in a crypto community that delivers nothing but fundamentals, sound technical analysis, and educational breakdowns. We also deliver anywhere between 2 to 4, possibly even 5 Zoom calls, depending on how I'm feeling that week, throughout the entirety of the week, breaking down fundamentals and going over technical analysis. Now, let's go over scenario number two. This will be if we see higher inflationary readings, understanding what that would mean for risk assets. So higher inflationary readings, again, just going back and looking at the core PCE price index month over month. Remember that the previous readings month over month and year over year were 0.3% and 2.7%. So higher inflation would be if we see a 0.4% month over month or a 2.8% reading or anything higher year over year. The impact that this would most likely have, higher inflationary readings on Friday, both month over month and year over year, suggest rising inflationary pressures in consumer spending. This would most likely prompt sell pressure in risk assets, as elevated inflationary pressures may rise concerns about potential tightening of monetary policy measures to curb inflation, i.e., leading to potential higher borrowing costs, higher interest rates for longer, or even bringing back a rate hike narrative. As we've heard from multiple Fed speakers over the past couple of weeks, that they will take precautionary measures if inflation does not come down. So just keep that in mind. That would most likely diminish expectations for further rate hikes, weigh on risk assets, and further strengthen the dollar. In a scenario where we see higher inflationary readings, I'm expecting for us on the total cryptocurrency market cap to see no further price appreciation above this previous high. So again, price failing to break above $2.4 trillion, and for us to see a further downside correction of this previous bullish move, potentially even breaking back into new lows, correcting more of this previous bullish move from where we had the lower inflationary readings in February and in January. Looking for us to potentially dig into these lows here or make new lows, maybe potentially even leading into $2 trillion of a total cryptocurrency market cap. This would be if we see higher inflationary readings. Looking at the dollar, if we see higher inflationary readings, give or take some liquidity grabs beneath lows, scenario number one on dollar would most likely be a dip down into discounted previous areas, some type of bullish order flow formation on the lower time frame, and a correction of this previous downside move. Scenario number two, if we do not see liquidity grabs beneath lows, would be if we see a bullish correction from where we currently stand. Higher inflationary readings would most likely lead to dollar back above the high 106s, possibly even breaking into the 107s. So, how that would correlate to some potential trade ideas on XRP. Personally, I don't look to short or take short positions on XRP. There are many CYPRX traders in the private community that do so. I personally don't. I would just look at it as an opportunity to get into discounted positions for my long-term bags. But a failure to break above the 54 key psychological level and make a new structure high above 57 to 58 cents, risk off market sentiment, I'd be looking for a further correction of this previous bullish move. If we end up breaking 47 to 48 cents, i.e. this previous higher low, my next bearish targets will be anywhere between 40 to 41 cents. And depending on how strong the dollar gets due to higher inflationary readings and how risk off averse the market gets, if we break beneath this previous low at roughly around 40 to 41 cents, my next bearish targets will be anywhere between 38 to 39 cents. So with that being said, I hope that you all enjoyed this in-depth video breakdown, giving you guys some perspectives into how to pay attention to risk on, risk off sentiment, what to be paying attention to tomorrow. Tomorrow is a very important data release day, so make sure that you're not ignoring this information. And if you don't understand it and you want a deeper understanding of how to apply these fundamentals to your trading, regardless if you're a dollar cost averager or a day trader, you can use this information in the CYPRX community to your advantage to situate yourself on the right side of the market. As always, many blessings to you guys. Be cognizant, be aware out there, and I will see you all in the next video.